Good morning, my Colorado friends. Randy Flett here. Today is Thursday, July the 22nd, and yesterday was a fantastic day, and I hope you appreciated the special report I sent out in reference to Bernake's comments and how it positively affected the bond market, which improved interest rates quite a bit. Now, in the rates go up category today, the Dow Jones is up, is about 200 points when I'm preparing this, and that's to be expected because it's correcting itself because yesterday it lost quite a bit. And once again, with the rates go down category, Bernake's remarks really fueled the bond rally. And the jobless claims, new and old, new and continued, are up quite a bit. Here's a graph showing the initial unemployment claims and just to show you what's actually going on. So right here is during the recession. You can see that we're up 650,000, and down before the recession it was like in the mid 300,000 range. And you can see that the jobless claims have gone down, which has been good. Then, like the last couple of weeks, really dropped quite a bit. But as you can see, it actually increased significantly. So, we've gone back to in like the mid 450,000 range. I know yesterday they were expecting 445,000, and it came in at 464, and that is also fueling the bond market also. So anyway, we have a long ways to go, and without creating jobs, rates are still going to continue to be low. Here's what's going on in the market right now. As I mentioned before, we've been in the sideways trading range, and even with yesterday's super bond rally, we've still stayed within it because I've been talking about the 101 to the 102. This area through here. Now, the thing that I really like is two things. One is yesterday we came down, we touched like the 10-day moving average, and we also broke above it, and we closed above it. And today as we opened, we were actually above what's called the shoulders right here. So all that is very, very bullish. Now, what I anticipate and think is going to happen is we'll probably come down, we'll touch it, and we'll have to hit this kind of ceiling or resistance right now. But I think once we do that, I believe that it's going to shoot up, and it's going to shoot up quite a bit. That's my own personal opinion. Here's a better graphic as we can go through. And before, I kept on talking about all these stair steps, which are very healthy to have a sustained bond rally. And once again, you can see where we're at. Now, on a word of caution, and you may actually be able to use this to help your clients. Anytime, and I've shown this a bunch in the past, anytime when we've had these peaks, see how it really drops down. Here we go, peak, way down, way, way down. Peak, down, peak, correction, peak, correction. And whenever we do have that correction, it's quite significant, and you can see this, and you can show that to your clients to get them off, the fence. Now, as you can see, we're way above where we've been before, and that's the reason we're having terrific rates right now. And here's what's happening in the market. It's a kind of a mixed bag. It really doesn't know what to do, and that's to be expected, especially after yesterday's huge rally. Lenders, you can see it's a mixed bag as far as how they're pricing. Almost an eighth, a little over an 8% better in pricing today. So in summary, Bernake's sparks a bond rally from yesterday, and as I was saying yesterday morning before he testified, if he was going to be pushed, he's got to show that he has a game plan. And he said jobs are lagging, and right now he indicated that rates will continue to be low for the unforeseeable future. And that's the reason that the bond rally took place yesterday. And as I said, today it's going to be a little timid as far as trading. The Dow Jones is rebounding. Some of the investors are taking profits from the bonds, and the jobless claims rose to February levels. Treasuries are still vulnerable after yesterday's run, and if it continues to be this way, I would not be surprised if we, in the near future, get to the 3.5 bond coupon, which would be fantastic. And once again, as I showed you, great rates. It's a great way of getting the fence sitters to take action, and for the other loan officers, because I know that they don't use timing services and keep track of what's going on. I would recommend that they go on and just lock the loans. I'm still going to float because I think things are still going to improve for my clients. Now, the thought of the day: smile, be happy, and be positive. No one likes to be around a negative person unless that person is negative also. And, that's very important, especially in today's environment, because all the negative news, people are losing their jobs, people are having, you know, uh, medical problems, their expenses, they can't get loans, they're just really down, health issues, whatever. And in this environment of all the negative news, people are looking for leaders, for positive leaders, someone that they can count on, someone that's going to be stable, level-headed, and people gravitate to people that are happy and positive and that know what's going on. So go on, and I encourage you to be that leader for all your clients. And today, as always, wanting only the best for you. Take care.